Good Monday morning, wealth creation investors and traders. Matthew Buckley, the chief investment strategist here at WCI. And we have a ginormous week ahead in the stock market. We're going to be getting a lot of macroeconomic data. We have a Fed meeting. We have an ECB meeting. But just as important, we have 130 companies in the S&P reporting. We have Facebook, GM, MasterCard, pharmaceutical giants, Merck, and Pfizer. Just to get into essentially the third or fourth quarter of first quarter earnings season. A lot of stuff going on this week that's going to really determine which way this market starts leaning for at least the short term. On Friday, quick debrief of what happened. We saw GDP again come in anemic. 2.5% growth, which is not going to grow us out of this economic malaise. And with the federal government changing the way GDP is calculated, it's more or less, hey, if we can't hit the ball over the net, let's lower the net. So I'm starting to look at these GDP numbers with a raised eyebrow. Short story long, this type of growth isn't going to get us out of the quagmire we're in. But again, folks, as my Top Gun options and wealth creation investing traders know, the stock market and the economy have never been more disconnected in the history of our great republic here. University of Michigan consumer sentiment actually came in better than forecast, but for the last 3 or 4 reports, University of Michigan consumer sentiment reports, they came in less than expected. So we're seeing these green and brown shoots, some conflicting economic data. Today, this morning, we already got core PCE, which was flat, personal spending flat, personal income down. Okay, so the consumers are spending, and by the way, the savings rate, here's something that should be troubling a little bit too. So incomes are dropping, and the personal savings rate, like the lowest in years, just absolutely disturbing. I think the lowest, in about 5 years here. Not good news at all. Tomorrow, we're going to see S&P Case-Shiller, we got some Chicago PMI, and the Conference Board's consumer confidence number. That'll be a market-moving number right there. On Wednesday, we're going to get April ISM numbers, and we're also going to get the end of the Fed 2-day meeting. Obviously, we can let's become brainiacs and forecast what's going to be in here, their federal funds rate. We already know what that's going to be. Obviously, everybody's going to be looking at what they say. They're obviously going to continue their dovish terms here. We're seeing, like I said, brown shoots in the market, which means the Fed isn't going to taper its printing of monopoly money for the short term. And they've seen the market pull back. Whenever they've come out recently and said, well, we're kind of sort of maybe thinking about maybe calling last call years from now, and the market goes freak mode. So they obviously don't want to do that again. So they're going to continue with their dovish tone, and we still see underlying problems in the economy, and we're going to do whatever it takes to prop that up. That's going to be followed Thursday by probably a similar type of language coming out of the ECB. ECB's going to come out with a statement on Thursday after some meetings, so we'll see if Mario Draghi over there in the ECB is going to print more out of the back of his Peugeot than Mr. Bernanke out of the back of his Lincoln. Obviously, weekly unemployment claims on Thursday, but obviously the biggest number this week coming out will be the unemployment rate. Now, obviously, it went down last time, and since you're all smart, WCI or TGO traders, you know that it went down for all the wrong reasons. About 600 million or 600,000 folks left the jobs market, which is not a good thing. Right? The unemployment rate going down isn't a good thing. Ben Bernanke has said, I'm going to keep printing money until we get unemployment down to 6.5%, but he's not going to stop printing if it gets down to 6.5% because things are horrible. Right? So big number on Friday with the unemployment rate and non-farm payroll. Remember this absolute swing and a miss, the 88,000 job. Nobody saw that coming. 88,000 jobs. Folks, we need at least 125,000 just to keep up with population growth, and this was a huge swing and a miss. So it'll be interesting to see what the numbers come in on Friday, and then some factory orders numbers there as well. So like I said, going to be a big week in the market. As I've told my Top Gun options traders, I really don't think we're going to see the sell in May and go away that we've seen for the past 3 years in a row. Right? Everybody should be very familiar with this chart. You know, the spring swoon. I really want to ditch that word from our lexicon here, but past 3 years in a row, this time of the year has been extremely volatile. We've seen the market pull back significantly each time. But the difference is that while each one of these years had a TARP, QE1, QE2, Operation Twist, QE3, this time around we have an operation that has no name. They kind of ended naming them just because this is QE infinity. Right, 85 billion a month, and this is what's going on with our market. You can't fight the Fed, and this thing just continues to melt up. Look at the past 3 months. Yeah, we've kind of run out of steam a little bit. You know, there was our sequester scare out of Napolitano and the FAA playing politics. Here's a little Cyprus and some commodities sell-off, but still, folks, you know, you can't fight the trend in this market. If we do see a pullback, I think it's going to be shallow, and it'll be used as a buying opportunity. I don't think we're going to see the big one. As I told my WCI Top Gun options traders, if we were going to see a big one, it was going to be based on poor earnings. But even with the not too hot, not too cold earnings that we've seen so far, the market's still powered higher. Okay? So got to run, got to get ready for a weekly options live trading session every Monday morning at 10 a.m. Got 2 new weekly trades I'm going to put on Google and Netflix. Closed 2 trades last week, one on Google, one on Netflix, each for a profit of $1,800 a piece. So nice 2 trades there, $3,600 in profit on $10,000 in risk, 36% return in 1 week. So got to get ready for my weekly session here. Going to be a big week. Make sure you check in every day to hear what's going on with our market sit rep over at Top Gun Options. So got to run. Happy hunting. Make sure you hedge, and I'll be back over at Top Gun Options tomorrow with our Tuesday sit rep. We'll see you.